So now we'll study types of capital gain. Types of capital gain. Capital gain are of two types: long term capital gain, short term capital gain. Abbreviation LTCG, STCG. How to determine an asset is a long-term capital asset or it is a short-term capital asset, and after that when we sell such asset, do we incur a long-term capital gain or do we incur a short-term capital gain, that we have to determine. So let's see. Long-term capital assets means assets specific capital assets hold for a period of more than 3 years. And what is short-term capital gain? Short-term capital asset means capital assets hold for a period of less than 3 years, 1 year, or 12 months. This is a different types of capital assets. How to determine a long-term capital asset? If the asset is holded for more than 3 years, then it would be termed as capital assets. And then if such asset is sold, after selling such asset, if any gain is incurred, such gain will be termed as long-term capital gain. Are you understanding what is long-term capital gain now? Short-term capital gain. What will be short-term capital gain? A capital asset which is holded for a short period of time, say for a period of 1 year, less than 1 year, or equal to 12 months. And after 12 months or equal to 12 months, the asset is sold and the gain earned from that selling is known as short-term capital gain. Please copy it down. I hope you have copied. Case where the period of holding, this 3 years is period of holding. This 3 years is a period of holding, 1 year period of holding, 12 months period of holding. Case where the period of holding is 1 year and more than 1 year, such capital asset will be termed as long-term capital assets. Now you will be thinking, I have just now thought about here 3 years, but the assets which I specify over here should have a period of holding of more than 1 year or 1 year. Specific assets. First, shares, equity shares, preference shares, whatever shares, it should be listed. Second, units of UTI. What does UTI stand for? Unit Trust of India / mutual funds. Third, units of zero coupon bonds. If this assets, that is capital asset, CA means capital asset, is holded for a period of more than 1 year, then they will be termed as long-term capital asset. And on selling of such capital asset, long-term capital gain or long-term capital loss can be incurred. Please note this down. Please don't note the down part that I have written. I have just written for explaining you all. This theory, please note down the theory first. I'll slowly teach and ask you to copy it down. At the last, when I'll finally teach you the sums, that time this all will benefit you all. I'll revise it now, till now what we have learned. I hope you have copied this down. See, for charging capital gain under income tax, what is the condition for capital gain? Capital gain condition is given under section 45(1). Capital gain will be charged if the following two conditions are satisfied. First, there should be capital asset and there should be transfer of capital gain. Capital gain section 45(1) is equal to capital asset section 214 plus transfer of capital asset section 247. 247 means 2 subsection 47. Both the conditions should be fulfilled or else the capital gain will not be charged. This is a condition for charging capital gain. After that, what is capital asset? Section 214, what is capital asset? Capital asset include all asset. You know, capital asset include all asset, whether movable or immovable, tangible or intangible, but does not include following. This is the thing that you don't know, and this is taught over here. Rural agriculture land in India, special bearer bonds, gold bonds of central government of India, stock in trade, that is inventories, movable personal asset, that is RSGSM. The code for this is RSGSM. What is capital asset? If anyone asks you in terms of capital gain, what are capital asset, then you can say capital asset include all asset, whether movable or immovable, tangible or intangible, but it does not include following RSGSM. Then he will ask, what is this RSGSM? Then you say rural agriculture land in India, special bearer bonds, gold bonds of central government of India, stock in trade, that is inventories and movable personal asset. But movable personal asset have exceptions. There are following assets will be considered as capital asset, and the following are PDA jazz. PDA jazz means painting, drawing, artwork, jewelry, archaeological collections, sculpture will be considered as capital assets and not be excluded from the definition of capital asset. This definition is very important. It might come for 4 marks, but while solving sum, you have to write the definition of the capital asset, whether the asset is capital asset or not. For that, you have to write this definition. This definition is looking big now, but when you write on your own, when you practice it, that time this definition will be concise. I have given you this definition in this manner because you will be able to remember this easily. I hope you have understood this. My advice is to you all, please rewind the video and listen the formula again, listen the definition again, and please repeat with me. This will help you to learn it right now, and it will not increase your burden studying afterwards. We have just now studied the definition of capital asset. Now we'll know types of capital gain. There are 2 types of capital gain, specifically long-term capital gain, short-term capital gain. Long-term capital gain is earned when a asset is held for a longer period of time. That is the long-term capital asset. What does long-term capital asset means? A capital asset holded for a period of more than 3 years or for 3 years. Such assets, when sold in the market, and the gain earned on that asset will be known as long-term capital gain. Similarly, in short-term capital gain, short-term capital asset means capital asset which are held for a period of 1 year or equal to 12 months will be termed as short-term capital asset, and on sale of such capital asset, the gain earned from the capital asset will be termed as short-term capital asset. there is an exception case where exception case where you will be calculating the period of holding is 1 year. That is the case where the period of holding is 1 year and more than 1 year. Such capital asset will be termed as long-term assets. Specific assets are shares, listed shares, units of UTI, mutual funds, units of zero coupon bond. Such assets are capital assets which are holded for a period of 1 year or equal to 12 months, but they are termed as capital asset. Short-term capital asset, they'll not be termed as short-term capital asset because they are on the liabilities side. If you think logically, these are all liabilities. These are all liabilities. So these are the liabilities of some other country. It comes on the liability side of some other country or the other company, sorry. So such shares are investment in our balance sheet in asset side, but this asset should be holded for a period of 1 year and not more than that. They can be held for more than 1 year, but for the calculation of capital gain, if they are holded for a period of 1 year or equal to 12 months or more than that, then long-term capital gain will be applicable. So what is the difference between the long-term capital gain and short-term capital gain will be explained further in the video. So have patience. Why I am exaggerating on this long-term and short-term capital gain, you will understand now. I hope you have copied it down.